BizTech's Investor Conversation Show in partnership with Saxo Markets. Now, today we have Jessica Amir, Market Strategy at Saxo Capital Markets with us as we look at 5 key themes on Saxo's radar and 50 stocks to watch in 2023 that may provide investors some shelter in stormy markets. Now, Jessica, welcome to the show.
Hi, Brian.
Now, Jess, for a start, what are the 5 key themes you'd like to share with investors right now?
Well, the first one is energy. The second is China and Chinese tech. As well, we've got the mega caps, which we believe will be front and center. And of course, we've got defense and cybersecurity. That's a sector in its entirety. And we've also got a few others up our radar as well.
And so I think one of the things you've talked about earlier prior to the show was lithium and green energy transformation.
Yeah, absolutely. So, and that's all because EIA, which is made up of about 30 different countries, are planning to be essentially carbon neutral by 2050. And some of those 30 countries are also planning to phase out fuel combustion engines by 2035. So this is really going to put a lot of momentum, we believe, in the battery metals sector. And indeed, we saw strong momentum last year. So we think that that could continue over the longer term.
Now, in that sector, lithium and green transformation, what are some of the stocks we should be watching out for?
So we like the larger end of town, and that's because we believe scale has a lot of added benefits, particularly because we do have still rising inflation and rising wage growth as well. So that means we're looking at stocks like Albemarle. However, we do have a basket that you can reference that refers to the largest stocks in the green transformation and lithium theme. However, if you think about Albemarle, they've got contracts with a lot of the world's largest EV companies. So think about Ford, think about Tesla, think about Peugeot, Nissan. This company, Albemarle, didn't do very well in 2022, but it's likely to have a comeback on the back of lithium prices, probably set to rebound on the back of rising demand as China reopens.
Now, Jess, the other sector that you looked at that looks extremely promising in 2023 is, of course, energy, which was a sector that did well in 2022. Walk us through the energy sector and some of the stocks that you like.
So that's a really good point. So the energy sector was the market darling, the sterling of them all, delivering the best performance across global share markets in 2022. So why on earth do we think, I guess, or why on earth do we think that 2023 could replicate that? Well, we do have OPEC, the OPEC plus nations, still not able to meet their daily quotas on a monthly basis. And then, of course, we've got China reopening. China, the biggest consumer of oil. We think already we've got domestic travel in China. Passenger congestion is up about 22% compared to this time last year. And you've also got Asian Pacific travel that is nearing 2019 record levels on a quarterly basis. So all these reasons support fundamental higher prices in energy. So in the larger end of town, we are liking the large caps. So an example of that would be Australia's Woodside Energy. We believe that they delivered double-digit strong earnings growth last year, but they could potentially, or they'll likely go again this year, given the oil rebound, and momentum is probably likely to continue throughout the rest of the year. So that's an example of a stock that we're watching. As well, Chevron, there's many others, but they're just a few to wet your whistle, I guess.
Now, I want to touch on the theme that you talked about in terms of the China reopening story, and another sector that you basically, or area that you've, key trends that you've identified is the China consumer and technology stocks. Obviously, the reopening story has a lot to do with that. The loosening of regulations now by the Chinese authority has also a lot to do with that. Walk us through what your expectations are for 2023 and perhaps some of the potential winners that we should be looking at a little bit more closely.
So based on earnings estimates so far, we already know that the Chinese markets, specifically Hong Kong's Hang Seng, as well as China's broad market, are going to be some of the market darlings this year. And that is exactly as you said, because of the reopening theme. So there's a lot of pent-up demand, and a lot of this pent-up demand is coming from the Chinese middle class. We spoke about earlier about travel picking up, passenger growth being, ground traffic being up 22% year on year. And then also we do have travel and domestic or Asia Pacific airlines that are starting to see a rebound. So this type of thinking that the Chinese consumer is willing to shop, is willing to go out there, is also flowing to Chinese consumer spending stocks. So think about vis-a-vis Alibaba. So Alibaba is pegged, has got the largest exposure to the Chinese consumer who is wanting to shop not only at home, but they typically buy their household items as well as clothing online. So Alibaba has been an outperformer, and we think given the momentum with consumer spending in China likely to pick up and government stimulus likely to pick up as well, Alibaba, Pinduoduo Duo as well, internet stocks that we're also watching, keeping an eye on. Collectively, as a whole, stepping back, thinking about the Chinese consumer and tech stocks, they're already some of the best performers so far this year. If you look at the Saxo equity baskets that we track, and we do think that this will probably continue, and that's what the market's thinking as well for 2023.
Now, the other thing that is dominating conversations right now is really cybersecurity. And you identified cybersecurity and defense stocks as key growth areas for 2023. And that mirrors the conversations that BizTech Asia has been having with CEOs from cybersecurity from across the region. Walk us through some of the key things that you've seen and some of the key stocks that you like in this sector.
So we just have to think about what's been happening with the NATO alliance and reflect back on last year. So the NATO alliance, which is made up of about 30 or so countries, is actually urging a lot of economies in that cohort to pledge 2% of their national income towards defense and cybersecurity spending. And there's a big reason for that. I mean, we just have to look at what happened with Russia's invasion of Ukraine, but also closer to home in Asia Pacific. We have the US Defense Secretary actually warning that Asian citizens would be likely to come under threat of increasing cybersecurity breaches. So we saw the Japanese Dealers Exchange come under attack. We also saw the Australian Taxation Office in Australia. They're being hit with 4 cyber attacks per month. We've seen many listed companies across the Asia Pacific hit. Now, what this basically means is that we can expect a lot more light on the sector and companies to spend more of their revenue towards protecting their customer accounts. So we saw that there were a lot of data breaches late last year. And I guess this really drives home that we think continued contracts and more contracts are going to go to some of these defense and cybersecurity names. So when you are thinking about defense and cybersecurity, a company like Lockheed Martin comes to mind. So Lockheed Martin, they have majority of their contracts with the US government, but a lot of them actually, a lot of investors sometimes forget that they've been serving, for example, in Asia Pacific's borders for over 70 years. So not only are they protecting some of our borders, but they also are protecting our airspace via cybersecurity. So that's an example of a company to look at. So Lockheed Martin. Another company might be Raytheon. They're a little bit more so exposed to the defense side. So that is also ensuring that our borders are safe, also repatriating lost refugees as well. So that's an example of a company to look at. So defense and cybersecurity, we think will continue to garner probably some of the best returns in 2023 and year on year. If we think about how we are going, this is getting already a lot of traction. It's up about 20%.
Now, finally, you talked about mega caps as stocks to look out for 2023. Talk us through your definition of mega caps and some of the names that you like.
Great question. So mega caps or blue chips, whatever you might like to call them, they're different horses for different courses in different markets. So in the US, we can think about Microsoft. We can think about Intel, for example, the largest companies in their fields. But when we think about our down under, what is a mega cap? It's basically a blue chip that is by sheer market size, one of the biggest on a respective exchange. So we think about blue chips in the US. We think that they could potentially see a very strong comeback. So some blue chips valuations are down about 70% from their peak. But we do know, looking back upon history, Brian, every time the Fed has actually paused rate hikes or even started cutting, we saw that tech actually outperformed. So in the subsequent 2 years after the Fed pause rates and then moved to cutting rates, we saw the S&P 500 as an example rise up about 24% over the space of 24 months. Sure, that's 2 years, but then you think about the ASX 200, home to a smaller amount of stocks, 200 stocks, and 25% of those are in mining. When the Fed actually paused and cut rate hikes, the ASX 200 rallied almost 50% over the space of 17 months. So what are some companies that we are liking and think that will probably outperform the US this year? Well, they're all in metals and mining. So at Saxo, we're very bullish on copper and also aluminum and also iron ore. And that is because we've got perpetual low supply and rising demand with China coming out of lockdowns. So we are seeing fundamental support there for higher prices in the key metals, and that is supporting the likes of BHP's shares and Rio Tinto and Fortescue Metals. And some of those shares, as an example, are already back in record highs. BHP today around record high neighborhood. Their shares have never been so high, but we haven't even got the earnings growth there. Earnings growth usually leads to higher share price growth. So these are some of the key factors that we think investors should be looking out for this year.
Now, Jessica, thank you very much for your insights. But before you leave, any final thoughts you'd like to leave the audience with?
I will say, great question. I think that, and we at Saxo think that earnings and earnings growth and earnings revisions will ultimately lead this year to better outperformance. So when you are looking for earnings growth, think about those sectors that are gaining traction and that are dropping costs. And that might be the key to picking winning stocks in 2023.
Now, Jessica, thank you very much for coming on BizTech's Investor Conversation Show.
Thank you so much for having me, Brian.
We've been speaking to Jessica Amir, Market Strategist at Saxo Capital Markets on BizTech's Investor Conversation Show in partnership with Saxo Capital Markets. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.